Welcome back, everybody. Sive Morten is here with the ForexPeaceArmy.com. Let's keep going with our analysis of the gold market. Not a lot of changes we have since our discussion in the weekend, but a couple of moments we need to clarify here. So on a daily chart, if you remember, our major conclusion was that actually this support line will become most important thing for a short-term performance of the gold, because this is actually not just the daily support, it's also the line of the pennant on the weekly chart. And since this pennant actually stands as a background, the foundation for the possible bullish scenario, and actually following the logic of the bullish action, market has to break it up just based on the technical picture that we have. The downside breakout will change everything and actually probably will make us to start a calculation deeper standing downside targets. So it will change the midterm perspective for the gold. But for now, until market stands inside of it, everything goes as it should. And this level is very important. So in fact, this is some kind of the pain or gain situation. Market either start upward action and stay inside of it. Not necessarily it has to touch it, but the action should start somewhere at the line or above it. Or the gain scenario, the pain scenario is if market will just break it down. So that will be negative sign. That's what we concluded on in the weekend. Now take a look on the progress on the follow time frame chart. That's the pattern that we agreed to take a look at. And we said that probably if everything goes well as it should, the point where we could get chance for position taking should stay between the 33-30 lows. So market has to take it and target around 33, which is actually a BCD target where we could get pure and great Garter's 222 buy pattern. But 222 features sense though that it not necessarily has to complete the AB equals city. Sometimes it shows a bit different city leg. The one major condition is that market has to just drop below the lows of the AB leg just to get the AB city pattern. So somewhere in between this area and this target in this level, we has to get some chances for position taking. Now, what actually new things we have currently on the gold? If you carefully will take a look at the price shape that is forming right here, you could recognize the falling wedge pattern. If you contract the B chart, you could see it even better. Classically, the fallen wedge is a bullish pattern because it shows indicates the enhancing of the bearish pressure. Because every time when the bears are pushing price lower, it's decreasing the swing of this downward push. So you can see its lows becoming not as different as the tops. So it means that the bullish pressure here is a bit becoming stronger, and that leads market to later to reversal. It means that if you plan to take the position in the gold, maybe it makes sense to think about position taking inside of the wedge, not total position, not at the whole trading lot, but at least 15-20%. So for instance, if you trade the whole lot on the gold futures, you could take here's with the fraction of the 1/6 or 1/5 points of your normal trading lot. And just see what will happen, because if suddenly market will reverse inside of the wedge and jump out, well, you will have at least some position to take part in this rally. While if you will be waiting for precisely 33 area, it might happen that you just will not wait it. So that's the common thoughts on the current situation. Speaking precisely about technical picture, what potentially patterns we also could get. For example, it might be butterfly inside of the wedge that theoretically could trigger the upward bounce. Besides, this butterfly is also fits well to a BCD pattern on the follow time frame chart. So we have the 33 butterfly has the target around 33.15 right here. If it will be 1618 butterfly, in this case the target will be precisely at the same level as the target of the ABCD. So if I plot here at the 116 area, you could see what the targets we actually will get. This will be very close to the 33, I suppose. Right, precisely on 33. So if it will be 1618 target, also possible. But actually, since market stands inside the wedge, more probable that it might be 127. So that's what we have on the gold. Currently something is building up on the gold market. Market is preparing. We are watching for the same patterns, but we think that market now is stepping in a overall performance where we should think about the accumulation of the position with the small fractions or small parts, preparing for a possible starting of the upward bounce, because technical background suggests that situation is gradually becoming more bullish, and especially if we will get this pattern, the butterfly precisely around 33.20 fib support, by the way, it might be the point where we will get at least the bounce, which led us to move stops to the break-even, and probably we also should try to use it. So that's the things that we intend to keep an eye on in the gold market. Now, those of you who watching this video by right to the end, here is additional bonus. So initially I would like to show it in your recurrency video, but I recognize it a bit later, and I will show you another setup, this time on the Great British Pound, which I think also looks great. So that's for most stubborn watchers who was able to watch this video right to the end. If we take a look at the British Pound on the daily chart, that's our former trade that we traded. If you remember, this great setup was market completed the target. But take a look what we have here. If at first glance it seems very small action, but if you calculate number of candles here, there's more than an 8 to the upside. It means that this thrust is suitable for the Jordan Napoli brand body trade on the lower time frame. Now, if you drop your time frame to the 4-hour time frame chart, it's bingo. It looks like the hand and shoulders buy patterns, reverse hand and shoulders. And take a look, the potential level where the bottom, where brand body buy trade should started, which is around 34.20. It agrees with the point where the potential right arm also should be formed. So if we suggest some harmony in a hand shoulder shape, so where the left arm, supposedly right arm also should be somewhere in this area. So particularly the brand body could trigger the starting of the hand shoulders. It means that the target might be not just the minimal brand body target, which will be just 618 pullback here, but it might be used just as the starting point and the triggering point for significantly stronger upward performance. So that's minor bonus for those of you who are watching this video right to the end. So we have great stops as in the gold market as in the British Pound. That's probably all for now. So let's see you next time.